Have you ever wondered about the current state of the Indian stock market? It's a fascinating world that's brimming with activity and potential. Let's delve into it. The Indian stock market, an epitome of resilience, is currently performing admirably in the face of global economic challenges. Despite the economic upheavals and volatility in global markets, it has managed to hold its ground and even thrive. This robust performance is primarily due to the strong fundamentals of the Indian economy, bolstered by a steady flow of foreign direct investments and the strategic initiatives of the Indian government. Yet, the Indian stock market is not just about resilience, it's also about growth. The market has been on an upward trajectory, with a steady increase in the number of listed companies and market capitalization. The rise of sectors such as pharmaceuticals and e-commerce has further fueled this growth, creating a diverse and vibrant marketplace. What's even more captivating is the increased interest from investors worldwide. The Indian stock market has become for investment, attracting not just domestic investors, but also foreign institutional investors. They are drawn by the potential for high returns and the opportunity to participate in the growth story of one of the world's fastest growing economies. Moreover, the Indian stock market has been undergoing a digital transformation. The rise of online trading platforms and mobile has made it easier for investors to participate in the market. This digital revolution, coupled with increased financial literacy, is leading to a new era of democratized investing in India. However, it's important to remember that the stock market is inherently risky, and while the potential for returns is high, so is the potential for loss. As such, it's crucial to understand the market dynamics and make informed investment decisions. Now that we have a glimpse of the Indian stock market's current state, let's dive into the basics of stock market analysis. In the next section, we'll explore how to decode the complex world of stocks and make sense of the market trends. Stay tuned. If you're enjoying this video, don't forget to subscribe to Random Shorts SAI. To navigate the stock market, one needs to understand the basics of stock market analysis. At the heart of stock market analysis, we find two fundamental approaches: fundamental analysis and technical analysis. Each of these approaches serves as a compass guiding investors through the labyrinth of financial decision-making. Let's start with fundamental analysis. This method is akin to the thorough examination of a company's health report. It involves peeling back the layers of a company's financials like income statements, balance sheets, and cash flow statements. Investors scrutinize these documents to understand the company's profitability, debt levels, and overall financial health. But the analysis doesn't stop at the company's doorsteps. Fundamental analysts also take a bird's-eye view of the company's industry position. They examine industry trends, the competitive landscape, and any regulatory impacts. They might ask, is this company a leader in its field, or is it struggling to keep up? Finally, fundamental analysts consider broader market conditions. They look at economic indicators such as inflation rates, interest rates, and GDP growth. They discern how these factors might affect the company's performance. Now, let's turn our attention to technical analysis. Here, the focus shifts from the company's intrinsic value to statistical trends based on trading activity. It's like trying to predict the weather based on past patterns. Technical analysts study price movements and trading volumes over time. They use charts and other tools to identify patterns that might indicate future price movements. They might ask, is the stock price trending upwards or is it about to take a nosedive? These two types of analysis, fundamental and technical, are the yin and yang of stock market analysis. They offer different perspectives, but both aim to guide investors in making informed decisions. Fully grasping these analysis types can help you make informed investment decisions. But remember, the stock market always carries risk. So it's crucial to do your homework, stay informed, and never invest more than you're willing to lose. Let's break down the first type of analysis, fundamental analysis. This is a method used to measure a company's intrinsic value, and it's all about digging deep into the financials. So, what exactly do we mean by financials? Well, we're talking about things like company earnings, profit margins, and return on equity. Let's take a closer look at each of these aspects. First up, company earnings. This refers to the profit that a company makes, and it's one of the most significant indicators of a company's financial health. If earnings are consistently rising, that's a good sign. It suggests that the company is growing, making sound business decisions, and effectively managing its resources. Next, we have profit margins. This is a measure of how much out of every dollar of sales a company actually keeps in earnings. A high profit margin indicates a more profitable company that has better control over its costs compared to its competitors. And finally, there's return on equity. This is a measure of financial performance calculated by dividing net income by shareholders' equity. Essentially, it shows how well a company uses investment funds to generate earnings growth. If a company has a high return on equity, it means it's generating more profit for each dollar investors have put in. So how can an investor use this information? Simply put, by looking at these key aspects, an investor can determine whether a company is financially healthy or not. If a company shows strong earnings, high profit margins, and solid return on equity, it's likely to be a good investment. But remember, while these indicators can provide a lot of insight, they're not the be-all and end-all. It's always important to consider other factors too, like the company's strategy, its competitive position, and the overall state of the market. Fundamental analysis is like conducting a health checkup on a company. Now let's move to the second type of analysis. Scene script. Time to delve into the second type of analysis, technical analysis. Technical analysis is the art and science of reading a market's pulse, of understanding its rhythm. It's a bit like listening to a symphony. Just as each instrument contributes to the overall melody, each data point in technical analysis tells a story about the market's direction and momentum. This approach focuses on price movements and trading volumes, the basic elements that make up the market's symphony. You see, every buy and sell order leaves a footprint. These footprints create patterns and trends that analysts use to predict future movements. Imagine walking in a forest and spotting animal tracks. If you're skilled, you can tell what kind of animal it was, which way it was going, and maybe even predict where it will be next. That's what technical analysts do. But instead of animal tracks, they're looking at price movements and trading volumes. These analysts are like detectives, using tools like charts and indicators to find clues about where the market might be headed. They look for patterns like the head and shoulders or the double top. These patterns can signal whether a stock is likely to continue its current trend or reverse. For example, a head and shoulders pattern is usually a signal that the stock's price is set to fall. On the other hand, a double bottom pattern can indicate a potential upward trend. But remember, these patterns are not foolproof. They're just one piece of the puzzle. Alongside these, analysts also look at trends. Trends are the general direction in which a stock or the market is moving. They can be upward, downward, or sideways. Understanding these trends is crucial because, as the old adage goes, the trend is your friend. In other words, it's generally safer to make investment decisions that align with the current trend. Technical analysis is like tracking a company's heartbeat. It reveals patterns that can guide investment decisions. So the next time you're evaluating a stock, remember to listen to its symphony. Its rhythm may just lead you to your next big investment. We've covered a lot of ground today, so let's summarize what we've learned. We started our journey with an overview of the current state of the Indian stock market. We discussed its vibrant and diverse nature, driven by a plethora of sectors ranging from technology to pharmaceuticals, all contributing to a dynamic economic landscape. We highlighted the importance of staying informed about market trends and fluctuations, as they can significantly impact investment decisions. Next, we delved into the basics of stock market analysis. We explored the importance of thorough research, understanding company financials, and scrutinizing market trends before making an investment. We also underlined the significance of patience and discipline in the stock market, emphasizing that it's not a get-rich-quick scheme, but a platform for long-term wealth creation. Our discussion on fundamental analysis shed light on its role in assessing a company's intrinsic value. We walked through the critical elements like earnings per share, price-to-earnings ratio, and dividend yield. We emphasized how fundamental analysis helps investors identify undervalued stocks, providing an opportunity for profitable investments. Moving on, we discussed technical analysis, a tool for predicting future price movements based on historical data. We explained concepts like support and resistance levels, moving averages and trend lines. We stress the importance of using technical analysis as a supplement to fundamental analysis, rather than a standalone tool. In wrapping up, we underscored the need for a balanced approach to investing. We reiterated that while the stock market offers a platform for wealth creation, it also comes with risks. Therefore, it's crucial to stay informed, conduct thorough research, and adopt a disciplined approach to investing. Remember, understanding the stock market and its analysis is a journey. Keep learning, stay informed, and make wise investment decisions.